So hello and welcome to another episode of Table Talk. Today I have my guest Luc Doucet from Allstate Insurance, who is going to take some time today to help us clear up some of the questions and misconceptions we might have about auto and home insurance. I know that in quite a number of the talks I've done, I've had people ask me questions, and I always thought it would be very nice to get somebody who is an expert in that field to come in and help us clear up some of the questions that are out there on what is the best auto and home insurance plan to get and why you'll get certain features over some others. Now, Luc, welcome. And could you just give us a little intro as to who you are and what you do, and we'll take it from there.
Thank you, Emo. My name is Luc Doucet. I'm actually an insurance agent with Allstate Canada. And for a lot of people, what Allstate is very well known from the US, but in Canada, we've been in Canada since 1953. And we have agencies, offices across Canada, but particularly in Nova Scotia, we have 4 offices around the HRM area to serve as our customers. Now, we serve our customers through our branch, through a telephone, through emails, through cell phone, text, and also automated. And we also have a contact center that can help also our customers.
Okay, that's great. So I guess is it fair to say that the 2 main things you deal with is home and auto at your agency?
Yes, we're known for home and auto, but what a lot of people don't realize is that we specialize in a lot of other services, such as pet insurance, such as travel insurance, such as life insurance, commercial insurance, specialty insurance like Aggerty, for example, if you have antique cars, and also we do security system. So we do a broad service, and our belief is we're trying to be a one home shop for our customers. So instead of a customer going from one company to another, they can always come to their agent at Allstate and say, hey, I have my home and auto with you guys. Is there any other service that I can, really that you guys offer? And the nice thing about these partnerships, we provide discounts. For example, Pet Plus Service is the company that we deal with, and when you get a contract through us with Allstate, you get a 5% discount on your price. Just as Liberty Security Service, they provide security system for home, and whoever installed their system will get a 10% discount on their home policy.
Okay, that's great.
Yeah. And while, Mimo, that we could talk about all these kinds of insurance services, I think we'll go with the most common, which is the auto and home, and that's where a lot of people make mistakes when they select certain coverage over others, because I'm sure, like any consumers, we always look at the price before we look at the values that is offered in front of us.
Excellent. Okay, so that's great. So today we're just going to narrow in on home and auto, as you said, and some of the other services which you offer. Of course, people could find that from talking to agents or just checking the website. Is that correct? To get all the
well, we'll talk maybe at the end of this podcast is why Allstate, how do we service our customers? But I thought maybe we'd focus on the home and auto first and talk about, why certain people select certain coverage and why are they being exposed to certain potential burden that can be happening down the road, right? Insurance, the one most important thing about insurance, Emo, is that it is there to protect you in case something happened, right? So it's there so that you don't profit from insurance, but you don't want to lose from not having the adequate insurance.
Right. So it's one of those ones where it's better to have it and not need it than need it and not have it, so to speak.
Yes, and I think what is happening in the market is that when people are talking about full coverage on an auto, they think just having collision and comprehensive coverage, that's full coverage. That's not entailing full coverage of a vehicle, right? So
Right.
right, so
Okay, so maybe what we could do now is you could start with home or auto or whatever. And I know that for quite a number of the talks I do, I have people who are just new to Canada or even people who've been here for a while, but just don't really understand the nuances and the little intricacies of insurance. So I'm hoping that in this podcast, you'll be able to help people compare apples to apples better in terms of what coverage best suits them. So for the most part, I'm going to you're the expert here, so you would just tell us, imagine I'm a new person here or somebody who just doesn't know too much about insurance. What kind of things should I be looking for in home and auto to be able to tell if I'm getting the best coverage for me? So you could pick auto and home and just start with one and then move to the other in your explanation.
absolutely. The one thing that I do, email, there's not a there's not a solution for all, basically, when it comes to auto coverage.
So no cookie cutter.
No cook. Yes, exactly. Now there's a lot of commonality between insurance company, but there's always differences. Now the first question I ask, a lot of people ask, should I get full coverage? Should I get collision and not collision? And the question I tell myself and I tell the customer to ask themselves is, if they were to lose that vehicle, could they replace it? Can they afford to take a financial loss on that vehicle and be able to purchase another vehicle down the road, right? So for example, let's just say you're paying $1,200 for insurance per year, for example, for full coverage, right? Now, if you didn't want to have full coverage, it would probably be that driver who pay about $1,200 for full coverage. Just comprehensive would be around $700 to $800, right?
Right.
Now the problem is that's a $400 difference. Now, if you have a vehicle that is 15,000 or 20,000, and you lose that vehicle, can you afford losing 15, 20,000 and pay for another vehicle, right? So that's one of the common mistake I see that people in the industry, because most agents just want a sale. Myself personally, I want a solution from my customer, so I'm going to ask that question.
Right.
The other thing is that some people, like for example, when you have collision and comprehensive on a vehicle, you have deductible that you'll have to pay in case of a claim. Now, some people, the standard is always 500 for collision, 250 for comprehensive. But is that there's are people that will require 1,000, some require 2,500, because some people won't make a claim unless there is over $2,500 of damage.
Right.
Right. So those are the kind of things that people don't negotiate with their agent, because they don't know that they can do that. They think that the agent, it's a solution for all, but there's not, because those collision and comprehensive coverage are there for you. But what requires, when are you going to use it, when you're not going to use it, is always a question you got to ask yourself.
Right. So in the case of the deduction for, say, the 250 or 1,000 or whatever, what question should someone ask themselves before they make a decision on that deductible, the amount they should have? What is the question they're trying to answer to make that decision?
Well, personally, myself, with my vehicle, I have 500 and 250 as deductible. The second thing is, with Allstate, and there are some other companies that offer, but not every company, but they reward their customer with disappear deductibles. So every year that you don't have a claim, they reduce your deductible. So for example, with Allstate, we reduce your deductible by $100. So if you are with Allstate for 5 years, you have absolutely no deductible if you have a claim,
Okay.
right? So just imagine. So you're saving $500.
Okay.
How do, because you're never, so that $500, you're never going to take it out of your pocket because you're not going to pay it if there's a claim.
Right. So now, just out of curiosity, say for example, somebody had done 5 years no claim, and they had that $500 thing, and then they had one claim the next year. Does it reset, or how does that work?
That is correct. So as the moment that you have a claim, it will reset.
Okay, and then from then on, it's the $100 again descending down each year.
Exactly. Correct.
Okay, so that's good to know. So you have scenarios again, since we're on auto, where somebody has, say they have a teenager in the house and they have 3 cars or something. What kind of coverage should they be? I mean, some people say, should you have? Is it called PLPD?
It's the term that it's an old term in insurance business, but we call it third party liability, which means is the minimum required in order to be legal in the province of Nova Scotia.
Okay, so is there any time that that makes sense? Or what scenario will that make sense for anyone?
For PLTD, yes. Personally myself, I don't see any time that would make sense, because even if you have a 2010 Honda Civic, if something happens to that Honda Civic,
right? For
example, if it's stolen, or if it's vandalized, or if you got a windshield replacement,
right?
Right now, most people don't realize a windshield replacement can cost between $12,000 to $3,000, depending on the vehicle and the feature that's on that windshield. But it is a $1,200 ticket. Okay. For having comprehensive. What I'm talking about comprehensive is anything that will happen that you have no control. You're not driving, you're not operating that vehicle.
Right.
So it is either 3 falls on your car. That's what we call a comprehensive claim. Okay. The other thing we call glass damage is a comprehensive claim. Someone stole your vehicle. Okay. Is a comprehensive claim, right? So the question people don't realize is that they have maybe a 2010 Honda Civic. They paid me $4,000 for it. If they lose that vehicle, they lose $4,000. They have to come up with another $4,000 or $5,000 to buy another vehicle.
To get the replacement, yes.
To get a replacement, right? Okay. And a lot of people don't. They always ask, so how do they determine what's the value of my car when it's damaged? Once again, I mentioned earlier, you don't profit from insurance. So what we'll do, if you have a 2010 Honda Civic and it's stolen, we will give you the money that will cost you to replace it. So basically, we look at the market in Nova Scotia, how much a 2010, based on the mileage and condition of your vehicle, will go, and then that's the money we'll give you. So we will give you the money to buy the exact same car, same condition. But you don't profit from it.
Right. Okay. Now, that's good to know. Now, I remember when I talked to you earlier, and you had mentioned something about not all cars are insured the same, and certain cars cost more to insure than the others, and you gave some reasons for that. Is that something you plan on touching tonight also?
Absolutely.
Okay.
Absolutely. For newcomers, they don't know the geographic of Nova Scotia, so they will. First of all, the first thing that people should know is that your address, your postal code plays a big factor in the insurance premium. So where you live makes a big difference.
So
and
when you say big difference, what kind of percentages are we talking about? Like 5%, 2%?
Could be a difference between $400 or $500 difference from one part of the city over others.
Wow.
Yeah, I had an example. I had someone who lived in the B3M postal code that's in the Clayton Park area, right? Mm-hmm. Clayton Park area is very populated, very very suffocated, a lot of police, a lot of present. So crimes are not as high in that area. So that's why the rates around that area, it's a suburban, it's not in the center of the city. So any suburban have preferential rate. But if you go into an area, and it's an area where we've seen a lot of crimes, and unfortunately we're not providing very competitive rate in those areas.
Okay. So I guess when somebody talks to you, that's when you go, so where do you live? And then you say, well, because you live here, that's why it costs this much more? Or is that how
Exactly.
it's presented? Okay.
Well, the reason why I explain that to my customers, because if you're talking to your friend Paul, and Paul lives in the B3M and you live in the B3R, you're not going to get the same premium, right? So, right. So it does play a factor. Yeah, so that's one aspect how we measure insurance. The other one is your driver experience.
Okay.
Right? What's on your record? So if you have a good record, you will pay less than someone who has a record, right? But the other thing we mentioned when we talk on the phone is the type of car that you're driving. Right. Now, people love Honda Civic. Honda Civic is one of the most common vehicle in Canada, but it's also one of the top 10 vehicle that is most stolen in Canada. Okay. Right. So, so you gotta. That's another thing. You got to look at what kind of vehicle that you're going to select, because it can have an impact on your insurance. And also, the smaller the vehicle, the more of risk it is for an insurance company. Because if you get into an accident with an SUV and you're driving a Honda Civic, the impact is going to be more severe on you than the SUV. So that's why SUV, bigger trucks have more preferential rates, and also newer vehicle with safety features such as backup camera, lane assist, integration, front alert integration. Those help avoid collision. Right. And I can tell you right now, from just a being driver myself, I probably avoided accident with my lane assist a few times, right? So blindside. So now people are talking about dash cam and so forth. Are they favorable? They are favorable. They will help you in an accident. They will protect visual what actually happened, but they don't provide discounts so far, right? So far the added gadget that you put in your vehicle doesn't necessarily give preferential rate. Not so far. Maybe down the road that could change, but what really changes is the safety features. If your vehicle is an SUV, do you have front warning? Do you have side warning? Do you have backup cameras? Those play a big factor in your insurance premium also. Okay. So, well, here's just an example. Say we'll take two small cars. You take a Honda Civic, which you said was the top stolen, and then you take a Toyota Corolla. If you're going to insure both of those, what kind of difference will you see? And again, I know that we're just giving guesstimates just to give some kind of an idea of what kind of a difference you have. And then I'm also going to compare if you had the Corolla to you had an SUV to see what kind of differences you would get if they were the same year of vehicle. And let's say even them was the same price to buy. So maybe not the same year, but the same price to buy, just to give some idea of, I guess put some weight behind the statement you made earlier on that if it's a bigger car, it might cost less. Or even if it's one that's not popularly stolen, it will cost less. So exactly. Yes. I can tell you right now, Hyundai, for example, would be less to insure than a Honda Civic. And the rate could be between 5 to 20%. Wow. Yeah. And how about for the SUV, the same 10 to 20% for? No, it could be up to 30 to 40%. Wow. Okay. Yeah, with Allstate, yeah. Because with an SUV, They mostly the SUV, especially the luxury SUV. You're talking about the CRV Touring from a Honda. You're talking about the Ford Escape. You're talking about the CX-3 and the CX-5 from Mazda.
Right.
You're talking about the Tucson from Hyundai. Those vehicles have all the safety features that we're looking for, and this is where a lot of insurance company differentiate today. Today, they're looking for safety. They're looking for rewarding safety drivers, but also safety vehicle.
Okay.
Allstate is all about doing both, actually helping the customer selecting the best vehicle and also reward them with safety discount, not just with safety feature of the vehicle, but your driving habit also.
Right. That's good to know. Now, if you had a family who had, say, a teenager who was getting to, 16, 17, getting ready to drive, from an insurance point of view, what kind of advice will you give them? I've heard some people talk about, go to, is it driver's ed or something or whatever. But, you get a family who says, oh, my kid's about to start driving. From an insurance point of view, what should I do so I get the best protection and a favorable rate? What should they do?
Well, in those situations, I have a large customer base, and I have some kids now that are reaching the 15 and 16, 17 years old. Well, but what I always suggest is that try to add them on your current vehicle. Don't try
Okay.
to get a vehicle right away because it's very expensive for new drivers to
Right.
be insured. Right? We're talking $5,000 to $6,000 annually.
Oh my goodness.
Yeah, it is a big risk because the number of drivers that are per insurance companies that are young versus the claim is very high, right?
Okay.
So we don't have a large population of young drivers. So what happens is that the slice is divided by most insurance company, and then we have the risks.
Right.
And it is prima. It's known that the younger drivers tend to get in an accident that will cause more severe bodily injuries
Okay.
because of the excessive speed or drinking and driving, using drugs, those things. And what is Allstate does to help bring awareness. Well, myself personally, with Mad Canada, we go from school to school. Not currently because of COVID, but
Right.
last year we went to a school around, the grade 7 to grade 12, and we showed videos, we showed the impact of drinking and driving, right?
Or being distracted while you're driving.
Distracted, driving, exactly. So those are all things that can play a factor into your ability to perform well on a vehicle while you're driving. So that's why. So what I normally tell my customers is that if you have a young driver, and if you have to give him a car, give him a crappy car. Give him a car that is very old, so that that they don't have to put collision on that car, and they just pay for liability. That would be the most economic way for a young driver.
And then from what you're saying, I almost even say you should have an old big car, because you say bigger cars are less to insure, right?
Exactly.
Okay.
Yeah.
Excellent. Now, is there any other thing else that on the auto side that you should cover before we switch over to talking about houses?
Yeah, well, with auto, a lot of consumption is that auto, just provide collision and coverage protection. But there's other protection that you should have so that, if something happened, you're not in a financial burden. So, for example, disappear deductible is one aspect that we offer.
Okay.
Accident forgiveness, right? So any driver who has 6 years of driving can qualify for accident forgiveness. What accident forgiveness does is that in case of an accident and it is your fault, we will not raise your insurance because of that first accident.
Okay. Now, is that an additional, is there a premium to that, or is that just after 6 years, or how does that work?
Yeah, there's always a premium for additional coverage,
Okay.
but those premium, those add value we call them optional services like you can provide. Those can save you hundreds and even thousands of dollars in saving if something happened. And remember, insurance is about covering you in case something happened, not
Right.
exposing you to a possible financial burden. So one aspect is accident forgiveness. And with I can't some other insurance company offer it and they offer with different premium, but with Allstate, it's a $50 annual premium that would be on your policy.
Excellent. Okay.
Yeah.
Well, thanks for that. I'm going to play this back and listen to a lot of what you talked about so I could pick up on that. And I know before COVID, I always used to enjoy coming into the office to sit down and just review my policy and where I stand and the vehicles I have to figure out if I still have the best coverage for my current situation. Now, is that something you advise people to do? Or, because the renewal letters come in the mail. Do you just get it and you just pay, or do you call to explain or do a review of your situation? What's your advice in that?
Well, to me, if you have a good agent, he would be on top of that. So
Okay.
for me personally, my customers, I know 60 days in advance that the policy is in renewal status. I know the price from my system. But what I do is I track every policy that I write. I have a nice little report and it's month by month. And when it comes to, I'll give you an example. For March, I know all the people that are renewing in March. So I reach out to them because
Okay.
I set up a call and I talk. Now, even though they're happy with the premium, they're happy with the increase or the decrease, whatever the reason is, that's okay. But that's not the only thing I want to talk about. I want to talk about what has changed. For example, many people during COVID went from traveling to work to working from home. They didn't call their insurance company to change the behavior. They didn't change going from not traveling to work anymore. They didn't change the number of kilometers that they're using the car. All those plays a factor.
Okay.
And so that's the first thing I look. And then the second thing, I look at what can be added on the policy that will protect you in case of something happen. Now, speeding ticket. Have you ever had a speeding ticket, Emo?
No, I haven't. Thank God for
Okay.
that. Yeah.
Yes, but some people have. And myself personally, I had one last year for the first time in my driving. Driving for almost 30 years. But the good thing is that it increased my insurance because I have on my policy what's called minor conviction surcharge waiver, which means that it protects me to get one ticket without impacting my insurance. Why those things important, Emo? Well, people don't realize if you had an at-fault accident, you pay for your premium, and then there's a surcharge for having an at-fault accident if you don't have accident forgiveness. And that surcharge starts at 75% the first year.
Whoa. Okay.
And it will impact you for 6 years.
Wow.
Yeah. So the second year would be 70%. The third year would be 65%. Then 55, 45, 25. But during those time, you're paying that surcharge. That's thousands of dollars.
Okay. And so what's that called again? You call that an
It's
incident?
it's called accident forgiveness, claim forgiveness. Different insurance has different term, but it will protect you in case of an accident that it is your fault.
Okay.
And the other one is what we call ticket forgiveness. So if you have a ticket, we'll forgive the first one. And people don't realize, once again, there's a surcharge to have an infraction, 20%. Some insurance company charge 40% for an infraction.
And so how long does it take that 20% to go back to zero?
3 years. So any infraction, any driving infraction that are minor are 3 years. Any major violation of driving are 6 to 10 years, depending if they're criminal or not criminal. But those will not be covered under any kind of coverage. If you do a major infraction, give you an example like stunting, for example,
Right.
that's not covered, right? So it's basically you're allowed to break the law a little bit, not too much.
Right.
Is the term, right?
Yeah, that makes
So
sense.
yeah. Now the other last two protection that I want to talk about on auto is that those are the two that people don't understand, don't realize.
Right.
So one is anything that added on a policy we call an endorsement. So because it can be removed and added on the policy without canceling a policy.
Okay.
But one of the really big conception is it's called an SEF 27, and it's for coverage for non-owned automobile. And that's basically, so for example, if you go rent a vehicle right now from Enterprise,
Right.
well, they're going to charge your insurance because you need to be covered for that vehicle that you are renting. Well, the good thing with that endorsement, non-owned automobile, is that it will protect you. That's the coverage.
Okay.
So for example, that coverage itself is $20 for the year, starts at $20 and can go up to $35 depending on the coverage. So 35, 50, or 75,000. But it protects you in case you damage that vehicle.
Okay.
Right? Now the insurance through the rental through the rental could be $40 a day. So if you rent the vehicle, I'll give you an example. A friend of mine went to Montreal for 2 weeks last year, ended up paying $1,400 for the vehicle. Out of that $1,400, $800 was insurance.
Wow.
I told him, I said, if you had that endorsement 27 for $20, you would have saved yourself $800. So, right? So those are the kind of things. So always ask and your agent should ask you those questions. Do you travel? Do you use other vehicles? Right? So
Right.
those are kind of situation where, because it's a financial burden to pay $100 of insurance while you can only pay $20.
Right.
Right? And the last one I want to talk about is new vehicle that you purchase from the dealership. What a lot of people don't realize is that you can protect your appreciation of that value of that vehicle for 3 years. Right? Because the first 3 years, you only pay interest on the loan. So if something happens in 2 years, you haven't paid much on that vehicle. That balance on that loan is still high.
Right.
And if you don't have that, you're basically getting the value of the vehicle at that time, but you still have that loan to pay. So many insurance company, not all, but good insurance company like Allstate, we offer depreciation of value, which means that if you add that endorsement on your policy, will protect the price that you paid for that vehicle at the dealership, the payout. So for example, if it was $56,400, if you total that car in 2 years, you get $56,400.
Right. Okay.
So that way you're not profiting because you still have a loan to pay, and you still have a car to go buy. Right? So
Right.
people say, well, it's kind of profiting. No, it's not. It's not a profit because you're still going to have to buy a car. You're just not you're not losing money out of this situation.
Right. Also, because I think I forget what the stats are, but the depreciation in the first 3 years is I forget how much it is, but is it 30% or more than that for the first 2 to 3 years?
The myth is that if you walk out of the yard with that car, is 30% depreciation from the beginning.
Oh my. Okay.
Yeah. So
Do you know?
yeah. So those are aspects. Now you mentioned that there's a lot of newcomers coming to Canada.
Right.
Now, for newcomers coming from Canada, the one thing I would tell them, with Allstate, we welcome any experience outside of Canada. So if you are from Africa, if you are from UK, if we are from France, if you are from the Middle East, if you are from Brazil or India, we actually provide experience. Some country has what we call a reciprocal agreement because they have the similar rules in Canada. For example,
Right.
UK, for example, Germany, the US, France. If you're a driver that's coming from these countries and you had 15 years of driving, we provide you 15 years of driving.
Okay, so for the person coming from, say, India or Africa or the Middle East, what proof do they show?
They would, for just licensing, like just basically a copy of their driver's license.
Okay,
Yeah.
that's good to know.
Yeah. But the one thing that they should bring with them is that if they have insurance, they should also bring that with them. Get a letter of experience from their insurance company, so that they can benefit from it. And that's another thing. Not every insurance company accept outside of Canada experience.
Right.
So so you have to kind of like shop around. Currently, at this time, I believe Allstate is the only company that accept. And yeah, and my clientele, basically myself personally, my clientele, 90% of my clientele comes from abroad.
Right. Now, did you tell me you speak French, Arabic, and English? Was that you who said that?
Yes, I speak currently French. I completely speak English and Arabic, and I'm catching up on Portuguese because
Wow.
I'm getting a lot of people from Brazil.
Okay.
Yeah.
And if you can speak Portuguese, then that means Spanish will be pretty close.
Spanish is very, very close to Portuguese, which is very close to French.
Okay. Good stuff.
Yeah. Yeah.
Excellent. Well, I guess maybe what we'll do in the end is I'll leave some contact information in case people have other questions, especially on the auto part. But we can now move to houses because people come here, you live in a house, it has to be insured. Again, just as you did for auto, what are the things people should look out for? How do you tell what you're getting, and how do you go looking for a good policy for your house?
Well, the home is basically is always looking at, the home, what kind of risks the insurance company is taking upon. So for example, the newer the home, the cheaper insurance is going to be.
Okay.
Right? If you have a good insurance score, which means that you've never had problem. We don't do credit check, but there's always like what we call a soft credit check.
Right.
And also that will look at the solvability of you putting a claim. There's many other factors into that, but it's just like your driver in abstract. This is an IS score. And the lower your IS score, for example, goes by letter A. So if you're AIS score, you get the best rate. If you're a KLMN, you're a big risk for us.
Okay.
Yeah. But fortunately, newcomers come from Canada don't have a good insurance score because they have absolutely no history here in Canada.
Right.
So the good thing is that they will sometimes fall with a no hit. A no hit, basically, they're not impacted by the rate. We give them a good general, it's not like an A, but it will give them a competitive rate, better than an M or K or L, basically. Right.
Okay, so on like automobiles, does your postal code have anything to do with it, or what are the factors?
No, the factors is the factor of the premium is one is you, what kind of insurance score you will be getting. Second is the home condition. How old is the home? So, for example, older the home, the bigger the risk.
And when you say older home, what is classified as an older home? I mean, if there's some kind of a line, where will you draw that?
Well, the draw line, anything after 80 is considered a risk, because before the 1980s, the building code wasn't as strict as it became in 1980. So a lot of electrical and plumbing deficiency that was in the 60s, 50s, and 70s were corrected in the 80s. So
Okay.
any home in the 70s and 60s, unless the plumbing and electrical has been redone, upgraded, then they're a risk, right?
Okay.
And that's why some insurance company will ask, when was the plumbing completed? When was the last time the electrical was done? Your roof will play a big factor, right? Because here in Nova Scotia, you have high wind, water, ice, and we have this condition called ice damming.
Yes.
It's not ice jamming, but damming. It's basically water condensed on the roof and it freezes, right? And it condenses your roof, and then there can be leakage in the home, right? So the condition of the roof plays a big factor. The heating of your home plays a big factor. So if you have an old tank, you're going to have a surcharge as a risk.
For oil.
Correct.
Okay.
And the older the tank, the more risky, the more premium it will cost you. Old tank is one of the most difficult situations that we need to manage as an insurance company, because we have to make sure that the old tank doesn't go beyond a certain age. And the reason for that is it's just not a leak in the home. If there's a leak in the soil, it can just not only impact your property, but it can also impact your neighbor, right? It can get into the water system, right? And cause more damage. So that's why insurance companies are always making sure that they have the most accurate when it comes to the tank, and we will advise. Now, the good thing about a company like Allstate, if you have some deficiency that needs to be replaced on your home, we're not asking you to do it in 1 month. We're giving you a year to complete it, right? Okay. So for example, I'll give you an example. I had a customer last year in June. His policy renewed, and his old tank passed the 10 years age that we require based on that certain tank. And so he received a letter from us saying that he needed to replace within the year. And then just 2 weeks ago, he replaced it. So he provided us the document, receipt, pictures. So I updated the policy. It changed in premium by $117.
Okay.
All right. So not only now he's in good condition with us, but also he pays less of a premium.
That's good. Now, how does what's the risk factor attached to propane compared to oil or electric or heat pump?
Propane is a gas. So just like natural gas, there's still a risk, but not as oil, right? So there's still a risk factor. Many people contact me to ask me about heat pump. It plays a significant impact on not only conserving energy, saving money on power, but it also saves money on insurance.
Is that compared to a baseboard electric, or just are you comparing that to oil?
Baseboard electric and heat pump is probably your best, least risk of a heat source. Then when you come with propane, natural gas, and oil tank, then it becomes more of a risk. But natural gas and propane are not as risky as oil tanks.
Okay. It's good to know. Excellent. So I suspect there are some group, or is it multi-policy? What do you call it when you have a house and a car, or how does that work?
Well, that's another thing too, is that if you have multiple cars and a home, make sure you're with the same company, because every insurance company offers a bundle. So if you have one car and a home, you get it's a percentage of bundle. And for a home and auto is 20%. But if you have a second auto plus the home, that's two vehicle and a home, that can go up to 34%.
Now, are there bundles for multiple homes?
We don't have a bundle for multiple home, but the one thing about home is not as regulated as an insurance company. So many of the insurance company has what it calls a flex credit. So if your premium, for example, if you had a home with us and you had a rental property, and the rental property was at 1,100 and you thought it was high, we can probably reduce it by $100 or $200.
Okay.
Yeah.
And we would have to call you to have a discussion on that. Is that how that works?
Absolutely. Yes.
Right.
Yeah. Now, the other factors that you mentioned, that the impact is the home. The square footage of the home will play a factor too.
Okay.
And any other detached structure around the home. So, for example, a pool, large deck, double garage, triple garage, electricity, plumbing in the garage. If you're like my dad, he has a TV and a fridge and a stove in his garage, so he can live there if he wanted to. If my mom threw him out the house, he's okay.
So he has his man cave. Is what you're
He's
saying.
got it's his man cave, exactly. So,
Okay.
but those plays a factor, obviously, right? So, because just remember, when you buy a home, so for example, when you bought your home, Emo, like what you bought for it, it's what we call the assessment of the home on the market. So.
Right.
So that always the sale of the home will always be different than what it's actually cost to rebuild that home, right?
Right.
So, for example, a lot of people who contact me, they buy a home for $399,000, but the rebuild will be $278,000, and there's like, well, no, the rebuild. Your mortgagee only cares about getting that home back to the same condition that it was, so that if you can't pay that mortgage, someone else will take over the home, right? So,
Right.
so that's the thing. So it's always the rebuild. Now, the rebuild can differentiate in certain areas. I don't know if you're familiar with Bedford, but I live in Bedford, and if you go on Larry EjiTech, or if you go on Matt's Head, or if you go on Southgate, for example, these homes are side by side.
Right.
I mean, there's not a lot of leeway. So those houses, to rebuild them, will cost more than houses that are more separated, because we can't take bulldozers, we can't take machine. So anything we do in those situations is manual.
Right.
And manual labor is more effort, more time. So, but the one thing I want to talk about, a lot of people don't realize, is that your home is your home, but there's more than just the home. There's the structure, the foundation, is there service line, especially if you live in the HRM area, your service line, your telephone line, all those are underground. If something happens to your home, certain company does offer to cover the service line and the telephone line, but some doesn't. And also a backflow valve, for example, If you don't have one, we will for Allstate, we will cover the service line. We will cover your telephone line. We will cover your backflow valve. All that is part of our offer. So when you're shopping for insurance, it's more than just having a policy cover you for fire. You need something that covers you for water damage, right? And water damage is just not sewer backup. It's a river stream. It's a sun and rain. So it's a river. It's a river. So anything with water, you need to have a comprehensive coverage of water damage. You need a comprehensive coverage of spills, for example. Some insurance companies do not cover spills.
When you say spills, what kind of spills are we talking about?
Could be gas spill, can be oil spill. Those kind of situation. If you're, let's just say you let your hubby get into the house with a canisters of gas, and he accidentally, leave it there, and the kid just push it down, or the dog just push it down, and the whole thing leaks. Javex ain't gonna do it, right? Right. So you're gonna have a smell of gas in your home. It's gonna damage some certain area of the home, and we're gonna need professional cleaning, possibly removing some of that flooring and replacing it. Right. So some insurance company will cover that. Some insurance company won't cover that. Right. So, yeah. And the one thing that I've found when people shop for home insurance, they're looking for the cheapest price, but they're not realizing where they're exposed. And those are situations that they can be exposed, and they could be financially would have to pay that out of their pocket. Right. Now go ahead.
Are you going to leave? Are we going to get some links at the end you could send to me, and I could add them, where if people want some more information on certain things you talked about, so we could get some links. I could put those in after.
Oh, absolutely. I just thought when I talked to my marketing team, they just said you should just have a conversation. They said trying to read by a script, people don't want to hear that. They just want to hear you talk. They want to listen to what you have to say and why you're saying that. And they said, when it comes from your heart, it's more passionate, it's more caring, and it's more loving, and it's more it will reach out to your audience. And that's why, having just a conversation, I think it was best. And obviously if they need information, they can definitely, the link that we will provide at the end of this broadcast and the contact, they can definitely reach out to me anytime. But very similar to home is very similar to car. You need to add value, like your claim forgiveness. We offer that for home also. We offer disappear deductible. So we also offer that. So, it's to add values. And if you have a home that is older, you need to put what we call a bylaw on your home. So it's a bylaw endorsement, usually costs about between $40 to $140 a year. But what it does is that if something happens to your home and it needs to be rezoned, then we take care of all the rezone, right?
Okay.
Because your own insurance company doesn't cover your rezone unless it's added to your policy.
Right.
And if your foundation is too close, not far enough, has to be modified, and you don't have the bylaw endorsement, you're basically, you have to pay for that foundation. Yep.
Okay.
Because the foundation is usually your responsibility unless you pay to make it the insurance company a responsibility. And I don't have to tell anybody a foundation how much it costs. You can just imagine how much it costs. It's around 30 to 50,000.
Right.
Right. So those are the kind of things that when you do when you do insurance, you should always talk to an agent. Now, I understand today everyone is busy and they can get a quote on the phone, they can do online, But I will tell you right now, between you and I, Emo, you're not doing yourself justice, because that website doesn't understand your need, doesn't understand what you actually need as a person. It doesn't understand where will you be exposed,
Right.
right? So that's why you should always have a trusted agent that you can talk to, because he will have that conversation with you, what's important for you. And at the end of the day, it's up to you whether or not you accept those endorsements. They're not forced on you. They're
Right.
recommended. They're recommended, right? But if you don't use them, you decline them, that's okay. Um, as an agent like me, I'll have very, important information on your policy, the reason why you decline. Um, but keep in mind that these endorsements that you add, these extra that you add on your policy, they don't break or make your policy. They don't impact your premium to a point where it's going to be a financial burden. In most cases, not having those premium versus others, you're talking maybe if you're on the monthly plan, maybe $10, $20 more, depending on the solution you put, and vice versa, right? So for example, if someone were paying $100 a month without them, could pay $110, $120 a month.
Right.
But the saving that they can have if they do a rental, for example, for a car, if they have to secure deductible, what it means when they have a claim, that can make an impact. If someone goes 3 years with Allstate with no claim and they has a class claim, they have no claim because they reduce that to a zero.
Right.
Right. So, and I've, not a lot of people appreciate those because they don't understand, but I had a customer one time when I told her, she says, like, what's my deductible? 250? I said, no, zero. She says, how come? I said, well, you've been with us for 4 years. You have never had a claim.
Right.
And she said, so she means I'm going to go and replace my windshield today and not cost me anything. I said, yep, absolutely. And she says, wow. And I was complaining because I had a $5 increase in my policy and I'm saving $250 today, right? So those are the things that people don't realize when it comes to insurance. It's having the right coverage, having the right package so that if something happened, you're not financially burned.
Excellent. Well, Luc, thank you very much. I know it's a lot to unpack in a short hour, and I'm glad at least we have a recording so we could go back and at least I could go back and listen. Other people could go back and listen and pick out things. I will get your contact information or just places where people could go to get some more information, and I'll add that when I'm posting this up. I appreciate you coming down. I know it took a little while for us to get this together, but I'm glad you came by. And I know that when I talk about the top 3 expenses when I'm doing my money thing, how much you pay for insurance, be it auto, home, or life, or whatever, is one of those things that pop up. And it's a place where, like I said, it's all about getting value for your money. It's like you said, it's not necessarily which one costs the least. It's which one protects you the best. Is what we're looking for, right?
Yes, and yes, absolutely. And on top of that, Emo, a lot of people when they're going to buy a house, they don't know where to go, where to start. So for myself, for example, I have a mortgagee company that I deal with. I have lawyers. I have real estate agent. I have other contact for pet insurance, for life insurance, and I also have a solution for people that have high risks. If they don't qualify for us, I have a solution for them.
Okay.
So with me and Allstate, you get a good neighbor, so that you are taken care of, and if you need other services, we can refer you to someone that we trust. And we know they'll take care of you because they're referred by me and we have a relationship, right? Because how the world of today works is that I have realtors that send me leads. I send them leads. I have lawyers. the same thing, right? Because when you have a home, you got to deal with a mortgagee, you got to deal with a lawyer, you got to deal with a realtor. So I have this package, and it's wonderful because we can, and the customers that use my solution are very happy because they're being given grade A, and I get feedback. My realtor will tell me, hey, we found the house. The lawyer will tell me, all taken care of. The mortgagee,
Right.
they got approved, all taken care of. I know I don't need to hear from my customer. I hear it from my partnership also. So those are important too, because I will help you when you can become my customer, and I will help you also when you cannot be my customer, because I'll make
Right.
sure someone else is taking care of you.
Yes, with your contacts, your expense and contacts.
Absolutely. Absolutely.
Excellent. Good stuff. Well,
Okay.
Luc, thank you very much. And
It was a pleasure.
thank you. And to everyone else, thank you for listening this far. And to see more videos like this, don't forget to subscribe. Luc, thank you. And we'll talk to you soon.
Thank you.
Thank you.
Bye-bye.
Good night.
Good night.